Welcome back. You're watching Taking Stock, and it's a week in which, of course, there was some consolidation, and we are taking stock of that. We've discussed market fundamentals. Now, time to discuss technicals. Ashwani Gujral now joins us. Ashwani, so quite a rocky week, especially towards the end. On Friday, we did see the market closing at low point, but is it presenting a buying opportunity? What would be your prognosis for Nifty and Bank Nifty now?
Well, on the Nifty, we are still range bound. We haven't broken down from the range, although today looked like a fairly strong down day. But, I would think that as long as 9250, 9270 holds on, maybe this is more a mid-cap type correction. The other thing is that ICICI Bank has had a strong breakout. And if, Reliance can probably bounce back from support, I think the large cap indices could be supported. The other thing is that this new ordinance which has come out, the Bank Nifty didn't react too badly to that. So it's possible that the PSU Bank rally resumes, ICICI Bank, the corporate lender rally basically resumes. So I am not too negative on either the Nifty or the Bank Nifty. You could have more sideways for sure, but possibly the mid caps could have a bit of a deeper down move. I would still buy closer to 9250 on the Nifty.
Ashwani, I'm going to ask you about your own picks in a bit, but before that, for next week, since you mentioned PSU banks, are there any fresh buys that you would recommend in any of the PSU names, either the frontliners or even the mid caps?
See, on the PSU banks?
Yes.
See, all of these guys, BOI, Union Bank, Canara Bank, while they did come off, from the highs, they didn't really close at the lows. So if you get any sort of, decline from here, maybe a 3 to 5% style decline, you should buy into them, because if the market would have taken the policy negatively, these guys should have been down 8-10%. So today's reaction is quite positive. They may not immediately start rallying, but I think people are still buying into them, and we should see higher levels on all of these mid-cap PSU banks particularly.
Okay, we're introducing a new feature in Taking Stock from today. We'll be taking some viewer queries to Ashwani. But before we do that, Ashwani, your own stock ideas for next week.
Well, given that, oil is weak, I'm taking on stocks which are oil sensitive in a sense. Berger Paints can be bought out there. We are expecting targets of 300 on Berger Paints. Most paint companies have done well, even Asian Paints. Similarly, on Jet Airways, we are expecting targets closer to 600. Again, aviation did well, although the market was under pressure. So these are stocks which can outperform even in a market which is a bit soft. And on microfinance, I think the way Ujjivan has broken down below its 200-day moving average, we could see levels of 260 to 280. So this is a short sell that people can play into.
Okay, well, as we were telling you, there's a brand new segment that we've introduced where we will try to interact with our, Twitterati, our Twitter followers. So we have a couple of queries coming in, and Ashwani, you can respond to them if you choose to. Kamal Arora has written to us saying that he's purchased 100 shares of Glenmark at 750 rupees, and he says he can hold for 1 year. Should he hold or sell? Well, he's making quite a bit of money on it. I mean, now almost a 15% gain is what he's made on Glenmark. You think he should exit, or do you think he should hold?
See, first of all, it's important to understand that this is not the time of pharma or IT. So he's making money because, Glenmark happens to be in a 750, 950 type of range. Each time it gets to 950, you need to exit. Yes, there will come a time when pharma stocks get back into a bull market, but this is not their bull market. So, if you are making money, take it off, again enter at 750, and it looks like you will get there fairly soon.
Okay, we have Saptashil Dev Ashwani, and he has bought actually two of your favorite names, Sobha at 390. I don't know if that's a good price according to you, and HTSC at 1380, and a long-term investor.
See, he's bought both stocks which are, performing in this current bull market. I think Sobha, he can easily keep a 360 type of a stop. Real estate will re-resume its rally. The RERA impact will probably still get factored in, and things will get cleaned out in that space. I would think Sobha can easily double from here. It's got clean balance sheet. It's a good developer. So he's got it fairly near the bottom, so nothing to worry on that. Similarly, HDFC, again, good price to buy, and housing finance remains a theme, although it will not move like a can-fin home, but chances are, as long as this bull market sustains, housing finance will be a theme. If you want to add on any declines towards 1500, 1520 is a good place to add, and I would expect 1700, 1750 in the times to come on HDFC.
Okay, and finally we have a follower, Meg Kenya, who's written to us saying that Bhushan Steel, after the new steel policy coming in today, is it a buy or a sell from current level? We don't know whether he has it and how much he's bought it at, Ashwani, but what we do know is the stock has had a very good run over the last 6 months. It's gone from 40 all the way to 80. What would your recommendation be?
See, Bhushan Steel has other problems other than the steel policy, and metals are not doing very well. So, if he's recently bought it, maybe keep a stop of 70, 72. And while it's in a decent uptrend, but given the way the sector is moving, I'm not very positive. Maybe if metals start to turn around, he could get 90, 95. But I like to be in spaces where, the sector is outperforming. So I would still be much rather trying to buy reactions on NBFCs rather than bet on metals, because metals overall are not looking very good.
Okay, Ashwani, thanks a lot for your time and for answering all of your queries. That's a wrap on this edition of Taking Stock. But before we leave, or before we go, we'll leave you with all the market opinion that we got all through this week. Thanks a lot for watching and have a good weekend.
In case of India, the consensus earnings estimates still continue to drift down. Over the last 3 months, the consensus earnings estimate, EPS estimate for MSCI India have declined about 3 to 5%. And contrast that with what's happening in the rest of Asia. Asia ex-Japan is up almost 7% during this period. There are markets like Korea where the consensus EPS is up 18% in the last 6 months. So in that context, India does look, the valuations do look a bit stretched at this point of time.
Right now, though, we do feel that there's a fair amount of opportunities available even in large caps. So from an index point of view, we're not as concerned. And we do think earnings growth will come back quite strongly in FY18. Our concern area is more as you go down the market cap chain. So there's some great companies, but I think valuations there we have to be a little more careful about.
Difficult to predict where markets will be in the near term. All I can say is I'm extremely optimistic on the medium term because economic growth is picking up momentum. More importantly, corporate earnings growth, which has been sluggish over the last 2 or 3 years, looks like it's going to accelerate quite nicely in the next 24 to 36 months.
Maybe we're very short term, a little ahead in terms of too far too fast, but I would say that that's kind of 3-4% here or there. But I think that the emerging market outperformance still has room to run. I would say that both Europe and emerging markets are seeing a catch up relative to the US, which had been the strong performer.
I still think GST is a potential disruptor to the economy, and that will hit mid caps and small caps more. So whilst we've had a great run, I do expect that this will be the one area where we'll start to see, the real kind of companies emerge